Good morning, traders and investors. Tuesday, November 11th, 2025. A happy Veterans Day if you have served for our country. Thank you for your service. Folks, we're going to get going with a good show here on Tuesday. Triple D and I with some good topics for you to go over. Kind of a quiet morning, but we got some good stuff for you. The Senate did pass a package to reopen the government last night, now going to the House. Trump says he supports the current package. The House can vote starting Wednesday after 4 p.m. As far as I've been able to research, PreMarket showing a high likelihood that the U.S. government will reopen this week. Couple earnings to go over, including CoreWeave, maybe Rocket Labs. We got C Limited and also Nebius here this morning. Moving on to a couple corporate news items. SoftBank sold all of its stake in Nvidia. It's about 32 million shares, and part of its stake in T-Mobile, about 40 million shares. We're going to talk about what this means for Nvidia, investors in Nvidia, and investors in the entire AI space. Little heads up, AMD does have an Investor Day event today at 1 p.m. We got a couple rating changes for later in the hopper. Our guest today at 8:35 a.m. Eastern Time, Frank Longman from Teixeira Partners. He is a CMT, so we'll get a little technical take on the markets. We'll get Frank's thoughts on what he has been looking at in these markets. Let's get it going here this morning on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, looky here what we have. Some nice charts brought to you by TradeStation. TradeStation is the official chart sponsor for Pre-Market Prep. I was working with Bill over at TradeStation yesterday to get a little setup like Joel's setup. Let me know, chat, how you like this or don't like this. We got the three setup here. We got the three chart setup. Let's take a quick look at SPY this morning, trading just under the 680 level. I got to figure out how to do the futures ticker on my TradeStation. Take a quick look at Qs here, trading around the 620 level. Why not? IWM. IWM looks like trading down 0.2% to around the 243.5 level. Let's take a look at GLD. GLD this morning trading up about 0.5%, 380.50. Let's do silver. Why not? Silver trading up about 1% here this morning. And Bitcoin, I don't know how to do the Bitcoin. So let's just do IBIT trading down about 1.33% here. Did I forget any? I think I got them all.
You
Triple D,
forgot
what'd you think?
Nvidia. That's what we want to see now
Oh,
is
here we go.
Nvidia. Let's get
There
this
we go.
show on the road. Show us Nvidia because this is the catalyst for the day. Yes, indeed. You hinted at it in the intro there, Brentster. Nvidia, SoftBank selling shares of Nvidia. They sold their entire stake, $5.83 billion worth of Nvidia. Doing this for other AI investments. Well, that's what it says anyway. So it sold its entire stakes. So SoftBank sold its 32.1 million shares in Nvidia, yielding a $2.4 billion gain. Proceeds will support over $30 billion in new AI investments, including Stargate data centers, while the company posted a record $19.9 billion net income, boosted by $26.5 billion unrealized open AI gains. So stock trade down. SoftBank selling the rep. It was a hell of a rep. Like, let's just give perspective here. From the Friday afternoon, like the lunchtime noon that we were talking about, to the close yesterday, Nvidia rallied over 10%. It's a big move. So if you want to sell the rep, man, you have the rip of all rips to sell. Like, that is a pretty violent rally from this Friday afternoon where we were. And a lot of momentum names, not just Nvidia, just so many momentum names. Like, you can look at his partner AMD was 221, 222. got up to 244. So, a quiet little 10% rally there too. I mean, these are significant, folks. So if you were coming in and buying yesterday, everything at the close, you're doing it backwards. You're doing it backwards. This is the market where it's been the fade trade most of the year, where you're buying dips. Awesome. The eternal strategy that works forever. But selling rips has also been working too. So buying rips, not so much. Buying rips, buying yesterday's close, getting punished a little bit here this morning, obviously, after we find out that, Nvidia's stake was sold here by SoftBank. So that's the catalyst for why the market's going down. Does that mean it's over? Does that mean we're going right back down to where we were Friday? No, it doesn't mean anything like that. It just means wait for your inevitable dip, because in this market, it seems to come a little quicker than everybody thinks.
So hypothetical. I'm an Nvidia long. I'm an Nvidia long-term shareholder. Why do I care about what this other firm, SoftBank, why do I care that they sold their stake?
I mean, if you value their opinion, and this is so I would treat the SoftBank. It's a great question, by the way. I would treat the SoftBank sale like a downgrade to the stock. That's what I would treat it like. It's like a downgrade.
Maybe like
And
a credit
why do you
rating
care
agency
that
downgrade?
analysts downgrade stocks? You care short term as a trader because it's going to move the price down. As an investor, it's a lot of noise. You still
Yeah,
buy good companies at reasonable valuations. The one thing is SoftBank has been in here for a very long time. So maybe they're starting to think that the valuation isn't reasonable anymore. Maybe they're moving on to other things. Maybe they just wanted to free up some capital, like they said they wanted to free up some capital.
right.
So there could be lots of different reasons. Michael Burry also, I believe, it was an Nvidia that he bought puts on? I believe it
Yeah,
was.
yes, yep.
It was Nvidia and Palantir, I think, that he bought
I think
puts on.
so. Yes.
I
Yep.
could be wrong. Maybe I just, Joel,
Let me
I
go
just
look.
dreaming something up, but there was two. I think it was Nvidia and Palantir. I mean, the PE on Nvidia is currently 56, but we like to look at forward PEs. Forward P is 30. The question is, and I've asked, and I still have a big position in Nvidia in my long-term portfolio, is how much pull forwards in there? Like, do we slow down on the nonstop Blackwell, bring it in? Does competition come from them via AMD? Lots of things to consider. There's lots of things to consider here. But bottom line is Nvidia's had a hell of a run, and SoftBank's bucking some profits. That might get other traders interested in doing it too. And I mean, the Friday rip was very impressive. If you're just looking at this from a technical basis, Joel isn't here. Major super duper resistance at 200, 199.94 yesterday. Yes, the whole numbers work. Why do they work? Optionality at those prices, psychological at those prices, just technical levels. So, big whole numbers work. 200, major resistance until now, it can get back up there. So, do you sell all your Nvidia and move on? I think it just depends on what your time frame is. If you picked it up on Friday and all of a sudden made 10% in 2 days, well, that's a pretty damn good trade.
Nvidia, we know that Nvidia is also pretty darn early as far as like moving toward AI technology, AI data center stuff. So, I mean, maybe SoftBank is just, kind of getting out of that like sort of early AI phase and wants to look
Maybe.
elsewhere for investments. I'm speculating. I'm
Maybe.
totally speculating, but
There's lots of reasons, and we can consider, lots of different things thinking about, it's had a hell of a run. I mean, Nvidia, it's not like you're investing early here, folks. It's $5 trillion. The stock has went in the last 2 years from, well, if you go back to the beginning of 2023, the stock was $14. It's 195. I don't know what the hell that is. It was 12 times your money in 2.5 years. It's been a hell of a run. Do I want to book some profits in it? Kind of, but
yeah,
I mean, where am I going with the money? So you got to
there you go.
consider that too. So if you're going to move out, if you got another investment, maybe it's a place to move on. I had sold some, and I did move some into AMD because I think there's a catch-up trade to be had. But I think there's lots of considerations here. I think I've been in it so long, I'm just comfortable with it. The dollar cost
Yeah.
average is pretty low. I bought at the beginning of 2024. I didn't get it at 13. But overall, I've been basically in this since $50. So it's been really good. It's been really good. I think if you want to be prudent and ring the register on a half, it's probably not a bad call. I don't know where we're heading. The one thing we have working for us is seasonality. Usually November, December is historically strong. Do I think 2026 could be soft? Yeah. Talking to my buddy Jeff last night in Canada, Canadian, completely different market. Canadian real estate is crashing. Canadian real estate is in full-in recession here. There are prices coming back down to where housing prices were 3 or 4 years ago, not to where they were pre-COVID. So just to give you like a feel, we kind of like went in like the, not Toronto. Toronto's its own thing, but Toronto's coming down too. But in my area, which is about an hour and a half north of Toronto, we kind of went from houses that were probably about 150,000 pre-COVID. So take us, pre-COVID. Those houses from like 2018, 2019, where they were 150,000, went up to about 700,000. That's where they went to 2 years ago. So it was a huge bubble. They're back down now under 5. So, I mean, when you compare to where they were in 2018, it's still like not that, not like a huge crash here. But if you look from where we were 2 years ago, somebody buying their house at 700,000 and it's worth 500,000 right now, there's some people underwater. There's some people that are like sitting on mortgages, and rates have obviously, Canadians completely different because you don't have those 30-year mortgages, they have 5-year fixed. So what's happened in Canada is all those variables or all those rates, their people were locked in for 3, 4, 5 years at 2% have now renewed at 4 or 5%. So people are like, oh crap, I'm really tight now. I don't know if we're getting to foreclosure. Some of that is starting, but that's minor, but just people are tight. And that's, trickling down through. The other thing to consider is replacement cost, is that to build these houses, building costs are up so much. So talk to my real estate guy again. He's saying those same houses that are going for 500,000 cost 700,000 really to build now. So that's going to slow down the build, because if you think about the logical course of how this works, this is just Canada, I'm not talking US, of how it works, is that people who are thinking about building a house and saying, oh, I can get this brand new house for 700,000, it's going to be great, or I can buy the used house, which is like 10 years old, for 500,000. Maybe I'm going to save myself 200 grand, fix that up for 50 and make that look nice. So it's a trade-off. So building starts to slow down a little bit too. And then it just spills over from there because all the trades and everything goes into that. Is that going to happen in the US? Not if they do 50-year mortgages. I mean, that takes a lot of things off the out of the equation here. So there's a lot of things to think about. You're in a different market in the US to a certain extent because people aren't underwater because they have those rates locked in for so long. So even, and then as rates come down, that helps. So we have to consider that too. Canada's been aggressively lowering rates, trying to get ahead of this. US has been starting to lower rates, probably trying to stay ahead of this as well. So lots of considerations, lots to think about, lots to chew on. But you put all the pictures of the puzzle together, and the stock market's trading at very lofty valuations. Do I want to be all in on this stock market? Or do I want to have like some cash just in case it gets ugly? The easy money's been made over the course of the last 2 to 3 years. We've really run a long ways. So we are definitely overextended, and the stock market in certain places are probably a little bit more optimistic than what the real economy is doing. That's the lay of the land.
Nice, Triple D. So, I'm like ready to go for the week.
Yeah, so let's just move into stocks, and it's about charts and it's about looking at different things and it's about positioning. We do have this, I gave a little bit of a bearish scenario, but we do have this relentless buy the dip mentality. It is there. It showed up, fiercely on Friday, continues to show up whenever we get dips. So I think we do have to just, consider all of the picture here, that it's not all bad news out here. It's not like, that everybody's packing up and the economy's going into an inevitable recession. There's just, warning signs. So we're just being careful with that. But, the AI trade continues here. We got a lot of earnings last night. We're waiting on Nvidia, which I don't believe
we did. We did get it was out a little bit earlier. I don't know why it wasn't hitting the wires, but I do.
Okay, we did get Nvidia. Okay.
Yeah, we do have it. You want to start there?
Well, let's go to CoreWeave last night, then we'll get to Nvidia.
Okay.
Because CoreWeave's your biggest mover of the day, and it's getting dinged.
Okay, give me 1 sec. Let me pull up the charts again. It's kind of fun controlling the charts, but I'm not that great at it yet.
No, but you're going to get better. So bear with us. Obviously, Joel's on vacation this week, so we got me and the Brentster, and Brentster using the trade station charts, which actually the black looks pretty cool. I will say this. The black looks better, but you can't see the numbers as easy. So we maybe could play around and do some adjustments. Like, I like black charts. I use black charts too. Maybe we can use a different font, a little brighter font. We'll try to play with it a little bit and figure it out. So bear with us here today as we're trying to figure this out. But CoreWeave reported last night. Brentster, if you do have the numbers, you can give them to me now.
I do have the numbers. They reported a solid quarter adjusted loss of 8 cents that beat the 40-cent loss. Analysts were expecting sales around 1.36 billion. Analysts were down around 1.29 billion. Then we got to the call. we got to the call, and kind of like within like 10-15 minutes of the call, one of the execs on the call said that the company was going to be affected by temporary delays related to a third party data center, and this will impact Q4 expectations. They did cut their 2025 guidance amid that concern. And watching the stock last night while the call was happening, when the CEO, I think it was, said that comment about delays related to a third party data center provider, Nebius, other data center infrastructure names also started moving. So when you have this kind of sensitivity on certain comments,
Mm-hmm.
that's the market showing its hand a little bit and saying, okay, I care about this relation and this relation here. So we were uncertain last night in the SCN room if Nebius was going to be moving because of CoreWeave. That didn't really happen until this comment from the CEO about concerns with delays.
And it's not other. We'll cover Nebius in this too. It did. Nebius dropped on the conference call. One
Good.
thing I will notice, and I've noticed this for years, is that when you have two companies who are basically same sector, when
Okay.
one reports and then the stock's trading down, the other one all of a sudden has a lot lower bar, like an instantaneous lower bar.
Sure.
They like to go in the opposite direction. They naturally want to go in the opposite direction when you have two companies reporting basically on the same day. I know CoreWeave reported last night and MBS reported this morning, but before we had an actual market open, they naturally like to go different directions. So, when you get the sympathy dip, sometimes that's a buying opportunity for the company. So if we go to the Nebius report here now, give us those
Sure.
numbers and we'll break down the technicals on this as well.
Okay, let me type in up here NBIS. And I don't know why Nebius didn't put their release out on the wire. I had to go to the investor relations page.
They had to dig.
Yeah, to
Lucky
dig.
you're good
So
at digging.
yeah, that's right, Triple D. So Nebius Q3 sales 146.1 million. Analysts were looking for about 156 million. I don't have a clean comparison here for the per share figure, but I do have a total adjusted net loss figure of about $100 million. That was up pretty substantially from about a $40 million adjusted loss in the same quarter last year. So overall, if I had to kind of summarize, Nebius report wasn't that hot, really.
They did get a contract too. I did see that as well. They secured a Meta AI infrastructure deal, talking about $3 billion. So not as big as their Microsoft deal, but that's
Sure,
not nothing. So I mean,
definitely
this
not.
company
Yeah.
continues to get in real contracts now, because when we talked about this company 3 months ago, before the Microsoft deal, they really had no real big revenue. Then they got the $19 billion Microsoft deal. Now they get a $3 billion Meta deal, and this company all of a sudden has real revenue here coming in. So that's something to consider. I think these companies trade on their contracts sometimes more than their actual earnings, because that's obviously future earnings. So Nebius trading up here now. That Meta contract probably helps it as well. Technically speaking, you're just in a range here now. 100 on the
Yeah.
floor, 135, 138 on the highs. And I think it's, that range bound trading here. So I'm going back to my old friend channelingstocks.com, shake your channel and go like that. I feel like the market might be going into range trading for a bit. We've been a while since we've been in range trading. But, the S&Ps, as we get up here, 681, 682, you got resistance up here. So, support's down there, 661, 662 on SPY. Resistance up here over 680. So, maybe we just go for range bound trading for a little bit. And that wouldn't be a bad thing. That's a good thing,
Nah.
like consolidation station, maybe to eventually go higher. I do believe we resolve higher eventually. I do believe that, seasonality will take us. I do believe that 2026 is going to be a rougher year for stocks. But I also thought that in 2025, and 2025 has turned out to be pretty decent after the really rough start. So it's always hard to bet against stocks long term.
Dennis with some nice quick technical analysis there.
I'm
So
trying, but,
you
I'm
did,
not Joel.
well, none of us are Joel. So what are we going to do?
That's true. So we had CoreWeave, we had Nebius last night. We also had, let's go to the quantum stocks here, because
Okay.
they're moving here as well this morning too. RGTI reported last night. We'll start with that one. We
Okay.
got the quantum stocks going kind of all over the place here, maybe two different directions here, but not really. They've all come back in. So give us those RGTI numbers.
RGTI Q3 adjusted loss, 3 cents, a beat versus a 4-cent loss estimate. Sales $1.95 million. Analysts were expecting over $2 million. So you can call this a mixed quarter. They beat on the bottom line, they missed on the top line. Didn't see any guidance, but when it comes right down to it, I mean, do the Rigetti earnings or the results, do they really matter?
No,
They don't matter.
because these companies have no real revenue. None of them do. So they're all just on hopes and dreams that they're eventually going to be able to solve problems that traditional computers cannot do. So, and you know what? I believe in quantum. I think it's going to get there. And I think quantum is going to be the way. But I also believe, that maybe what Jensen Huang was saying, when he came off talking 15 years
Sure.
from now, his timelines may have been closer than what, a lot of market participants might be hoping. So I do think there's opportunities here. I think you might have to sit on these stocks for a long time, and I think 2026 might offer you better opportunities in some of these names. The way I continue to play quantum is IBM. It's like,
Sure.
you get the core IBM value business with a call option on quantum if they can figure it out. We know IBM only, unfortunately, has had good leads before and not figured it out, AI, like with AI Watson. But I mean, IBM's sitting up near the highs. It looks to me like it's flagging. It looks to me like it wants to go higher. It looks to me like, I think seasonality could bring this up, and it doesn't hurt that we're a little bit value-y right now. Like, we
Sure.
haven't been, but how do we know we're value-y? Well, check out Berk.B. You don't have to
go.
look further than this. In the last 5 days, Berk.B has went from 475 to 500. Value kind of a little bit back in vogue again. So IBM is the value quantum play. Now they're going to look and say, well, it's trading 27 times, but it's not trading, a billion times sales. So I mean, if you're comparing apples to apples, IBM's a hell of a lot more value than any of these other quantum names.
And sometimes we have these moments where like you feel like you got some information maybe you shouldn't have gotten. And I feel like that moment with Jensen Huang saying quantum is 15 years away, I feel like he said that because it was like early on in the AI trend, and the AI and the quantum names were like, oh my gosh, you can't say that. Why did you say that? We're way closer than 15 to 20 years away. And then he like walked the comments back kind of thing. I don't know. It's funny. I feel like that was a little deep piece of info that people kind of like maybe slept on a little bit.
Yeah, I'm in none of these stocks. They're not going to touch my long-term portfolio because I think it's just too far away, and I think the buzz here will bring these stocks lower. I also believe a lot of these companies will probably go bankrupt. So I think there's going to be some survivors. I don't know who they are. Maybe it's going to be QBTS. Quantum D-Wave was on Kramer last night, and he
What
said this
happened?
is the one to play. Like he says, if I'm going to buy one, this is going to be the one. So he's a big fan of QBTS. The stock popped up to like 30 because it gets the Kramer pump last night. It's given it all back here with the overall market sell-off this morning. But I mean, so I don't know who the winner is going to be, but I can tell you there's going to be some bankruptcies in this sector. So the safest play I still think is IBM, because I don't think IBM's going bankrupt.
Was there a D-Wave quantum exec on last night for Kramer, or did he just talk it?
No, it
Kramer
was a
just talked it.
D-Wave. I think it was this. It might have even been the CEO. I don't remember. I think it was the
And
CEO.
the exec didn't especially impress you. You didn't
No,
mention
they
them?
are. They talk. Oh yeah, Brentster. If you sat in a room with any of these quantum execs, they would sell you whatever the hell they want to sell you. These guys are salesmen, man. Like, you really watch that interview and you're like, holy crap. The last one was more impressive, and I think it was QBTS again. I might have been a
I
different one. I
think
get them
it
all
was
confused. It was
QBTS. Yeah.
QBT, QBTS, IONQ, RGTI. There's some smaller
There's the
players. Citron, like triple
QMCO.
CX. So there's some smaller ones there too. But oh yeah, no, Brentster, they would like you would actually be buyer. So believe me, they can sell you stuff. They're salesmen. It sounds really cool. Like, they sound like, they can use so much less energy. It's the problem is it just has to work in these sub-zero temperatures, and they got to figure all that out. There's just, and again, I'm not a techie guy, so I butcher it just talking about this. But,
Yeah.
My overall thought process is that it sounds like, once quantum gets there, they'll be able to do stuff so much faster than traditional computing power. So, but how to get there is the question. And, I think that they don't have all those answers yet.
Yep, for sure. Want to keep going on the earnings train? Rocket
Yeah.
Lab, C,
Yeah. Do Rocket
BBAI.
Lab. Do
Rocket
Rocket
Lab?
Lab and
Okay.
ASTS. They're kind of the same.
Oh, ASCS, good call. I forgot about that.
Yeah,
Okay,
we'll do
let me
both
find
those.
Let me find my chart here. I'll pull up RKLB and I'll get you those earnings. RKLB reporting adjusted loss 3 cents, a nice beat versus a loss of 11 cents expected. Sales also beating 155 million versus about 152 million. Their guidance was pretty solid. Rocket Lab sees Q4 sales 170 to 180 million. Analysts are down around 172 million. Rocket Lab shares here this morning trading up about 8 or 9% on this solid report, it seems. Oh, I didn't pull up the chart. Here you go.
We did have an ADP report, and I did not see that at 8:15. But it's weird. It's not like the
They're
official
They're
ADP
doing
report.
so they do it weekly now. They're doing it
Yeah, they're just
weekly.
giving
Yep.
us a feel, a feeler.
There is an actual like index you can go to. I can get you the link here
Okay,
real quick. I'm going to it
sure.
right now. Let me see. This is some data you want to see the result of? You're
Yeah,
saying?
well, I'm reading it here, and I'm getting it from Street Insider. Thank you, Street Insider. U.S. lost average of 11,250 private sector jobs in 4 weeks. That's what the Dow Jones is reporting. So the ADP says ending October 25th. So jobs a little bit softer. That's a little bit more information for the Fed to think about cutting rates, but the market's coming down on that here too because it's a little bit softer.
So ADP is going to be issuing weekly updates on the private sector employment. But from what you just said, I think we already got that. We got the October data last week. So maybe they are just doing the weekly cadence. I don't know. But I do know that we are going to be able to see weekly jobs data from ADP on a weekly basis. I don't know if they did this because of the government shutdown or this is something that they already had been planning to do. But from now on, we will be able to get weekly updates on ADP.
Okay. That's good. So we're going to get some data in here, but the government shutdown is going to end here, looks like really soon. So we're going to get all our regular data in really soon. So we'll see what's going on. They'll have to cook some books for them, so that doesn't look too bad.
ASTS, you also were we done on Rocket Labs? Were you good on Rocket
Yeah,
Labs?
well, Rocket Lab so had the pop and kind of held here. So that's the one good news. Bad news is the stock's in a little bit of a downtrend. I think there's going to be overhead supply. Next.
Okay, ASTS.
Yeah. It kind of went down right on its report and it kind of bounced back. Again, the fade trade's sort of working here on these.
ASTS with a miss for the quarter, 45-cent loss, missed the 23-cent loss estimate. Sales also missed at just under 15 million. Analysts were up around 20 million, but they did reaffirm their sales guidance for the second half of this year. They're expecting sales in the range of 50 to 75 million for ASTS.
Just hanging out. Again, though, we have seen, so the bubble has officially burst in a lot of these names. The names that like ASTS is talking about from 40 to 100 in 3 weeks. The bubble's burst. MP Materials, ASTS, Rocket Labs, the bubble's burst in all these things. There was a bubble and it burst. So now we're come back down. So now what? What do you do after the bubble has burst?
What a question.
It's unknown. Like sometimes bubbles can reinflate and stocks can go back up to highs. But what we usually like to do is see some strength start to form, some stabilization, stocks stopping to go down, stocks showing you key reversals, happening, which we saw in a few names. Like MP Materials had a wicked key reversal off its earnings report, where the stock made a new low. We're going back to just, on Friday, I think it was the 7th, which was Friday, I believe.
Yeah.
Stock made a new low. And the pre-market was down like 47, but didn't even touch those levels. Opened at the low of 50.50. Then Q reversed and got above the previous day's high. That's nice. That's what you want to see. And then it tacked on more yesterday. So it looks like, hey, now we've got something to build on here on MP Materials. Am I chasing it? No, but backing and filling. So what you do when you see these stocks going from 48 to 64, you don't buy them at 64. You now put them on your radar. And if it comes back in that range of 55, now you got some levels to lean on.
Dips to be bought.
Exactly. So it wasn't dips to be bought. Even when I bought it too soon, but I put it in the long-term portfolio. But it doesn't matter. I'm still buying too soon, trying to be a hero. And I ended up being down for a while, and then I'm back up in it now. But, I didn't have to take that kind of heat. Maybe wait for those reversals. The earnings and stocks love having like reversals off of earnings. They just like to capture all those traders. People are like, oh, this earnings report sucks. I'm going to short this thing. And then they capture those traders. So, I mean, that's why, you see wicked reversals. It's misinterpretation of key information is a lot of times when you see key reversals happen. That's what we saw in MP Materials. Does that
Yeah.
mean all of them? Like, well, we saw key reversals on a lot of stocks that day. So I think there's the opportunity here to be looking at some of these names and backing and filling and maybe backing up, and buying some when they actually dip, but not buying, rips yesterday when the NASDAQ's up 2% a day. That's not the kind of day to add stocks to your portfolio. You are doing it backwards, set it for the second time today.
And look at these little clues that the market gives us. So here's the MP chart, same chart, 30 minutes. Here's the ACLO chart. And look at those charts over in the left-hand pane just do not look the same. And you would say, well, MP is a minerals play, a rare earth play, and ACLO is a nuclear play. Well, these stocks were trading together for quite some time. And now it seems at least over the last couple sessions, they're kind of separating a little bit. So what does that mean for MP and ACLO? I don't know. I mean, you wait and see. You take those little clues and you try to use them when you can.
Yeah. Lots to think about, and that's all the market is. It's like clues. We're putting clues and putting pieces of a puzzle together. And that's good, like that's how you've got to do things. It's just like taking information and putting pieces of the puzzle together. Some people just use one piece and it's called technical analysis. I like to use multiple pieces to put my piece of the puzzle together. A little bit of fundies, a little bit of technicals, a little bit of sentiment, a little bit of feel, a little bit of feel. That's probably my biggest piece. And then statistical arbitrage, relationships, all those pieces of the puzzle. Like we can actually have a whole, probably like 10 different pieces of puzzles that you can put together. I think too many people rely just on one piece, which is technical analysis.
Yeah.
I think there's so much more to the market. I love technicals too. They're fun to talk. It gives us something to talk about. Man, you see those key reversals, it gives us good levels. I love technicals as well. But why not use all the information available? That's what I say. And I do think it's relationships that drive the bus more than anything. Like, I don't care
Yeah.
what the Burke.B chart looks like right now. All I know is it is completely and utterly inversely correlated with the S&P at this moment in time. Why? Fundamentally, it makes no sense at all. They got a bunch of stocks in there. So it should move with the stock market, but it doesn't. It is completely 100% inversely correlated with the S&P right now. So me understanding that gives me an edge over a lot of other people. They might just say, oh, I like the chart on Burke.B. Well, if S&P futures start going up, I know to short Burke.B. It doesn't matter what the chart looks like. Right now, if S&P starts going down, Burke.B is probably going to reverse. S&Ps were up most of last night. Burke.B is trading down. S&Ps go down overnight. Burke.B goes back to the green. It's trading with staples. It's trading with Coca-Cola, Procter & Gamble, Pepsi. It's almost like the algorithms have these programmed right now. It will change, folks. Burke.B is not always inversely correlated with the overall market. Otherwise, it would be at zero because S&Ps continue to go high. And that's obviously not the case. But at this moment in time, it is. So understanding those relationships gives you a huge edge over the next guy.
Killing it this morning, Triple D. Love the little
Feeding
tidbits.
knowledge nuggets. That's what we're
Yes.
trying to do. Knowledge nuggets.
Love it.
We do see our guest, Frank Longman, in the background. We don't have his video here yet, so he's working on that. We will be with him shortly here once he gets his video and figured out there in the next minute or two. Yeah. One more earnings before our guest. Let's do BBAI.
Okay, BBAI. Okay. Pull up the
Stock is trading
chart.
higher, significantly higher, up 19%. So it's one of your big movers of the day. Unfortunately, we have this whole thing I just talked about, overhead supply. What is overhead supply? It's when the chart's all up here, stocks went down significantly from the highs and started to come back up. You got all this pain up here above $7, head and shoulders and everything up there. 7 looks like major resistance to me on this stock. How'd the earnings do?
Earnings were solid. They reported a 3-cent loss. Analysts were looking for a 7-cent loss. It's a beat. Sales also beat 33 million versus about 32 million. Slight beat there. They reaffirmed their guidance for 2025 and they announced a pretty substantial deal. They are going to be buying a company called Ask Sage, $250 million purchase here for BBAI. I mean, solid earnings. Stock is going higher when it is doing the acquisition, which is a little contrary. This has been a stock that you have been watching for quite some time, Dennis. I think it's just fun to trade. Is that right?
Love trading this stock. There's also
Yeah.
BBAI. .ws if you want to trade the warrants there.
What is
So,
that?
sometimes
Wow.
those are fun to trade off of it too, because sometimes there's some arbitrage opportunities there. The algos aren't as good as you think they are. But I mean, just from a technical basis here, it's like you look at this chart, and again, Harlan Payan, wherever you are, you gave us so many knowledge nuggets over the years when you were first guest on Pre-Market Prep. But he always says, just look at the chart first, like go at the 90-day. Just look at the chart in the first 2 seconds, what level jumps out at you? I just look at this chart and I see 7. Why? I don't know. It just jumps out at me. I like you see all
Right.
that resistance up there at the end of October. I see, the head and shoulders, the right shoulders formed around 7 here. Not that we're big pattern traders, but it just looks like major resistance. Well, what happened, after hours here? Where did we get to?
A little bit over 7.
Yeah. Where do we fail? Right around 7.
Yep.
So, I mean, that's what the market's all about, is just like, quickly identifying. Don't overthink it. Just like, bang, what just popped in your head? 7? That's where they're sellers. 7.
Joe always used to say, or maybe you used to say this, but like squint your eyes. Like squint your eyes and what pops out to you. Like if you don't have good vision, what's the first thing that you see? I think it's a really good way to think about a lot of these. For all the complicated technical analysis that there can be, I like to just kind of like just glance and pick a nice big round number. Want to
Frank
go get?
Longman hanging
Let's
out
go
in the
get him.
background here. Let's play that guest intro. Let's bring Frank in.
All right. Frank Longman from Teixeira Partners. Frank, how is your morning going? How's your week going?
Great so far. Nice to see you guys.
Yeah, thanks for joining us this morning. Let's talk the markets like we always do. Were you listening into a little some of the conversation we were having in there?
I was, Dennis, I was digging your comment about being very technical, but using all the tools. And one thing that I say a lot here is my long watch and short watch don't overlap, right? And if something makes it onto my long watch, I'm trading it on the long side until I change it to another list, right? And we've had this conversation in the past with Bitcoin and stuff. I don't own it, not because I don't think it can go up, but because I don't understand it, and I don't know. I would be a weak holder if I were trading something that I didn't understand. So
Sure.
I'd rather trade the backbone of that trade. Or the Coinbase, for example. I know there's an audience for Bitcoin, so I don't mind owning Coinbase when that's set up well. But the actual coins, I just don't understand the mechanics, and I'd be bad at the game.
Frank, let's
Oh,
talk about your trading just in general here for a second, because we have a majority of our guests don't short stocks here. I short stocks. I came from Bright Trading. Joel obviously came from market making perspective, but you do long short stuff here too. There's a lot. There's a lot to know about. Once you start getting on the short side, it gets interesting here to a certain extent. Can you just talk about like your long short book here and talk about shorting stocks in general?
Yeah. I mean, so we've been, we are long short. We do hold ourselves to downside capture, which means we need to make money when the market goes down, just like we need to make money when the market goes up. And so that's something that we've done a pretty good job with, especially this year. And but like since May 10th, when the market kind of, I thought, inflected to an uptrend from a downtrend. We've only been about 4% net long, and we've been keeping up just fine with the market. And so I think it's the short book tends to be take what it's going to give you, right? We're not long short because we're bearish, right? We're long short because that's our mandate,
Yeah.
right? And we think we have a skill set that can, keep up with the market despite being protected when the market goes down.
Why go long short? And I'm just asking myself this question too, obviously, because I continue. But in this market environment here, it seems like it's just been like blindly buy the dip, win money. And I'm like, I question, like, and I've been doing long short for 26 years here, basically trading market neutral strategies. And, when somebody asks me that, I say, because it smooths my earnings curve. That's pretty much what it does to a certain extent. Like you're not getting, murdered, on the big down days, but you're not killing it as much as somebody that's long only on the up days. If you could just take volatility and take everything, why even bother on the short side?
It's a great question. It's a great question. I mean, I look at it as, the duration of my short trades tends to be about a tenth of the duration of my long trades. And I look at it as an escort to let me keep the length that I want to keep on through minor market dips. Even like this morning, I came in, we were fortunate I saw it Friday morning and, bought the heck out of momentum Friday morning. And this morning I come in, I'm like, this is a little stagnant. You're up 180 handles or 200 handles from Friday's low, right? I'll go smash a bunch of NASDAQs and S&Ps and go from, a 20% net long position to a 10% short position that I'm fully expecting will be gone by the end of the day.
What stocks are you picking on in that short book right now? You were saying how you have your long book, your short book, and if you're, obviously like a stock, it's in your long side. If you don't like a stock, it's in your short side. Like two questions. One, how do you get that, list of stocks that you like to short or like to go long? And then two is, do they flip around? Like, do they keep changing? Okay, I like this one from the short side now as opposed to the long side.
Yeah, great. So, I think slopes of 50-day moving averages, if we're keeping it super simple, right? Like if your 50-day slope turns down and I'm long it, I have a self-discipline decision to make, right? And so we are very technical, but I like to think that I know a little something about how the stock market works, and when things are getting full, and sometimes you have to fund strong with strong, right? Because if you're long momentum and short momentum, right? Like if you're long the strongest momentum names and short the weakest momentum names, then you expose yourself to a momentum crash, which those can clip you for 10% in a day.
Oh yeah.
So try to be conscious of being long. If we parse momentum into 5 quintiles, right? If we're long waxing top quintile momentum names, right, or the strongest momentum names that are still strengthening, right, maybe we have to fund them at the margin with some top quintile momentum where the short-term momentum is waning, where we're trying to just pick off a dip, right? Um, in dips for me, right now I'm basically just compartmentalizing the market against October's low, right? So S&Ps against October's low, that trend is alive above 6650. So we were right to tolerance on Friday. And not trying to think too much, right? I think there's a good chance if you want a soundbite, I'm trying to bet that Friday was the low for the quarter.
Oh wow.
You
Yeah,
know,
we like that soundbite.
guy who I run short more often than I run long.
There's a question in itself too, running short more often than you run long. Why is that?
It's beta. I think it's beta. So, a lot of times in this trade right now with the AI trade, retail's in the trade, institutional's in the trade, vanilla, hedge funds are in the long shorts are in the trade. And, you need to be able to understand that this isn't the classic hedge fund low beta grind higher, right? Like the classic long short hedge fund model is long quality compounders, right? And funding it with all this stuff that retail loves, right? Now everybody's in the same trade, right? Because that's where the alpha's been. How long it'll last? I've been kind of thinking it could last until first half of 27, and that's just simplistically, that's a 7-year cycle up off the COVID low.
Yeah.
So I'm trying to respect that, but I trade mostly on the long side, the backbone stocks, the grid names. I had been pretty involved in nuclear for a long time, but I bought some back Friday, but it's not what it had been for us, the nuclear trade. It looks like it's post parabolic, you want to respect that. But I like the nuts and bolts of the grid background backdrop. I think we talked about this like 2 calls ago. We don't know who's going to be the winner in delivering power to data center, but we know that these grid backbone plays are going to win no matter what, right? So maybe it's not as sexy as owning a higher flying nuclear name or a microgrid stock, which we've done that too, but it's steadier, and you can get some pretty good size on, at least for us, because we're still small. You can get some good size on and not be testing liquidity.
So, can you name a data center play or two that you've been looking at recently?
Oh, I mean, I think the guys that connect power to the data center, right? Or build the grid out. You've got like Hubble they make basically everything that hangs on a power line and then some. HUBB, that just had a big relative turn for the better.
Yep.
That looks like a bull flag there on your 30.
Yeah. Stock
Right.
that nobody talks about either. Like, do you pick on
Yeah.
stocks that nobody else? Like, there's another question for you too. Are you looking
Yeah.
like under the hood for stocks that people haven't found yet? Like people who like, media isn't like all over it, because we know the data center place. Hubble's not one that's jumping out and being
Right.
talked about on CNBC every day. I
Right.
mean, so
Yeah.
are you looking for the sneaky plays?
Yeah, I usually am, right? Like, so if you think about it, like for our investable universe, it's basically 1,500 stocks. Call it the S&P
Sure.
1,500. 90% of what we do is in the Russell 1000. But yeah, I'm always if 2 years ago, Nvidia was on TV every single day, right? And we were long SMCI, which went up 4 times as far as Nvidia. It was basically a whip to Nvidia, right? So,
Yeah.
maybe in 2023 there were only 17 stocks that were, that had momentum of relative strength stronger than Nvidia, right? So we've got 1,500 stocks. Nvidia's number 17. You can bet we own the bulk of the first 16. And so that's the way I like to think about it. There's anything can be other than the number one stock, and don't ask me what it is because I don't know. Other than the number one stock, every stock is a source of funds for something in some model at some time frame.
This brings us to another question here, because SoftBank, and I don't know if you saw the headlines this morning, dumped their entire Nvidia position. It's why the Nvidia is trading down here this morning here. And they're using this as a source of funds to fund other AI investments here. Is this, Nvidia trade? What are your thoughts? Let's get stock specific here and ask your thoughts on Nvidia, because I mean, this has been the play for AI for 2 years here now. Is it long in the tooth?
I mean, I don't want to get too stock specific, chart specific. Is it extended and divergent? Yes. Can we find things that we like better than Nvidia? Yes. If Nvidia is going to continue to go up, is something like Astera or Credo going to go up more? I believe so. ALAB or CRDO. Those are kind of my current Nvidia proxies when I want to be long Nvidia, and I don't mind running Nvidia across from them either.
CRDO is another one too. Why do you like this one?
Yeah, so it's basically I got this. I was listening. Do you guys listen to the Brad Gersner and Brad Gurley's podcast B2G?
Okay.
So I Gurley is like an idol of mine, right? Like I just think I think he's the best. And they were talking a couple of years ago, probably, or 18 months ago, about flops analysis, right, in the server stack, and about how every piece, every connection in that stack is part of the solution to faster chips. It's not just faster GPUs. It's about, can the connections between those chips, when you stack those GPUs together, can those connections, right, deliver, more than 40% pass through or throughput, right? And that's how I found Astera was, I guess they helped the throughput get up into the 70s or something. And take that with a grain of salt. I'm no longer a fundamental analyst. But so like that, and then you're like, oh wow, and then look at this chart and look at this growth, right? And then sponsorship isn't here. We know that the vanillas that are going to own Nvidia own it, right? We don't know that the vanillas that are going to own Astera own it yet.
Sure, sure. So, Frank, how are you positioning into next year? Do you have any things on your radar for like early to kind of like mid 2026 that you think we should definitely have on our radar as far as like upcoming catalysts for investors and traders?
Yeah, that's a great question. I've been using S&P 7450 in the first half of 2027 as my target, right? We'll probably
Okay.
get there in Q1 if this thing doesn't get Q1 of 26. I think we call it the carrot and the stick. The carrot is S&P 7450. The stick is S&P 6125, right? You can correct 38% back to April's low at any point. That's 6125. I use the future, sorry. So you can subtract 40 if you're using cash. But I mean, 6125, if I tried to ride that out with this book, I'd be dead. So 7450 looks like a pretty good upside objective. That could extend up towards 9,000 if we get an extra year or two. You got to remember in the stock market, it's not like we're not taking a discrete snapshot of this market in time, right? You have to reconcile your stock prices with your money supply, right? So if money supply is rolling up on a 45, what humans perceive as a flat line is really a 45, right? So you're oscillating around that, right? That's another reason why I can generally run a short book and not die, is because I'm normalizing that money growth.
Frank Longman, appreciate your time here this morning, bringing some, some level-headedness to us. I like it. I like it. Thanks again for joining.
Yeah, thanks for having me, guys. Have a wonderful day.
All right,
Frank,
you too.
awesome stuff. Thank you.
Bye.
Later. All right, Triple D.
It's just fun getting different market perspectives. Like that's like a professional market perspective there. Like we have so many people come in, that's, fundamental analysis, long only, pure technicals. Like Frank's all over on like quantitative analysis there too. So it's nice. It's a breath of fresh air. Down, we're just kind of hanging out. We were up overnight, kind of gave it back. Nvidia, don't look any further. It's Nvidia. It's a SoftBank sale that's got this market a little bit under the weather here this morning. So we call it soft market because SoftBank brought down Nvidia. Does a dip get bought? I think it's just within this market. I like what Frank said, actually. Like he thinks that could be like the low for the quartile right there, that we just hit on Friday.
Mm-hmm.
I think he could be right. I mean, it was such a violent reversal off of that. And you had people thinking, oh, it's over. When everybody starts thinking, oh, it's over, it's not over. So, Friday morning, we had lots of people coming in and saying, ooh, like this is getting ugly here. And you know what? They just started buying and they didn't stop buying. So now you've caught shorts once again. And that is usually the next leg up here is for that. So is that when you catch the shorts, that's what really can drive price for the next little while here. So I think you did catch some shorts on Friday. Renster, you got something to say, though?
I do. I want to say thank you to our wonderful sponsor, Hive Digital Technologies. I got the chart up there on screen. We got our nice overlay up there. Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly half a gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. Just around 45 days left. There is a QR code left. There's a QR code in the bottom right corner of the screen. You can scan that to get some more info on Hive, or you can click into the description of this YouTube video to click a link and again learn more about Hive. Thanks again to Hive Digital Technologies.
Yeah, thanks obviously again to Frank Holmes, who believes in us, and obviously coming in here and sponsoring the show when it was our first sponsor, so we really appreciate it. Hive does report earnings on Friday, by the way.
Oh, good little
overall market thoughts. Let's talk crypto here just for a second, because
right.
I still say the same thing, is that Bitcoin kind of led us on the way down. We kept thinking, the S&Ps and everything, oh, it's moving higher, but we kept warning signs were always crypto. It was like not participating in the rally, not participating in the rally. We did reverse nicely on Friday as well. We didn't talk about like IBIT was down to $56, closed up at 59. Ethereum, same thing. So, why do we care about this? If you don't trade crypto, why do you care? Because it's risk assets. So it's a proxy for risk assets. And these are 24-hour assets that trade around the clock. So you can go get a price on Bitcoin on Saturday, kind of get a feel for what risk assets are doing. It's the same type of investor that is in your core weaves and your momentum trades and all these as crypto. Now, I know some people just trade and they say, I'm in core weave, I don't trade Bitcoin. But I mean, it's the same grouping of investors, the Momo traders. They're in there. They're not caring so much about fundamentals. They care more about a good story, and momentum. So, I mean, looking at Bitcoin here, we're still in a bear market in Bitcoin, unfortunately. We have overhead supply. We have all kinds of issues. Like if you just look at the IBIT and keep it simple, 65 is like the wall of all walls up there. So you got to forget about 72 for now on IBIT. 65 is like, just, keeping you down here. So I think, again, there's just a lot of overhead supply here, which makes me a little more cautious. Doesn't mean, it's not, it can't go higher and it's not eventually going to take those out. But we want to see crypto participating here. Crypto, again, weak here this morning. You want to see the turn in crypto, really, because it kind of led us on the way down. Maybe it just potentially leads us on the way out of this.
I like your thinking.
Yeah, and overall, like you can say, what are you talking about, Dan? The S&Ps are all-time highs. So we're not talking about value trade. We're talking about the overall Momo names. So Momo is in a bear market. Crypto in a bear market here. Value is doing well. S&P is very diversified, doing well. Q is not far from all-time highs. Mag 7, not far from all-time highs. No bear markets to be seen there. But, well, maybe there is. You can get into Metas and Microsoft, and certain ones have the bear markets. Apple's obviously been very resilient because it's like a staple. But I think we're just at this market where it's really stock specific. There are certain pockets where we have definitely seen a lot of momentum come out, and it could reignite. If Frank's right and that was the low for the quartile, you're going to want to be buying dips on some of those names. Maybe this is the time to actually get in some of those names. Somebody's asking a CoreWeave. Is this the time to come in and buy CoreWeave? We got all kinds of support down there, 84, 85, where we bought them in August and September. So as you come closer to that, you start thinking, yeah, maybe it's potential. But then you look at the longer term chart and you think, well, and then you look at the fundies too, valuation, there's no valuation support. So, mixed reviews, I would say, on CoreWeave. But, are we in a buy the dip market here? I think so. I think after Friday, it moved us again. So I think I'd be like looking at buying dips.
We got a few minutes left here. Triple D, you want to do a couple ratings that you had on your radar just for old time's sake?
Sure. eToro. We haven't seen eToro for a while. They're getting upgraded to overweight at Deutsche Bank here. That stock had a nice move. So this stock has just been in a relentless downtrend. And if you want to talk about a stock that, just stop just trying to like catch the falling knife, wait for some strength. This has had no strength since August. This was a $65 stock back in August. And it's just been this slow, steady death by 1,000 cuts, taking us all the way down to Friday's low, which Frank might be right, at 32.66. And maybe this is going to be the lows for a lot of these stocks. So now you had the ridiculous rally. You've rallied, 6 points or 18% in 2 days. Too much, too fast. So too much for me to chase. But now I'm looking and saying, hey, this is strength after the dip. So now on a dip now, let's say we get back down to 36, 35 bucks. Now you can take a shot. So as opposed we never say any strength really the whole way down, now at least we're starting to see some life here. So we get the upgrade this morning, so it's probably not going to give you a dip here this morning. But I think, there's a possibility here that maybe that low from Friday could hold for a stock like this. So it becomes interesting on dips. So I would put this on my shopping list, not the long-term portfolio, because I don't know anything about eToro long-term. But as a trade, it goes to the shopping list on dips. The other rating on my radar, which is very similar, and again, this is like a stock picker's market because there's so many stocks in bear markets. Here's another one. Maple Bear or Instacart, whatever you want to call it, CART. They are getting upgraded by BMO here today. They are upgrading the stock to overweight. Actually, maybe it's the quiet period is over here because there's a lot of other.
Would that
no,
make
it's been out for a long time.
Yeah,
so
it's been out for a while. Yeah.
I don't know why there's 10,000 people. Did Instacart have earnings? It must have had earnings or something.
Let me see.
Because there's like literally like 20 different ratings here.
They had earnings. Yes, they had earnings yesterday.
Price target lowered Goldman. Price target lowered Citi. Price target lowered Mizuho. Price target lowered Needham. Price target lowered JP Morgan. Price target lowered Bernstein. Price target lowered Deutsche Bank. Price target lowered Benchmark. A lot of lemming calls here. Maple Bear Cart says several paths for shares to outperform, says Cantor Fitzgerald. The only one jumping out here with a flat out buy, though, upgrading is BMO Capital. They see an attractive valuation here. Says kickstart it. You got good support at 35. So if you're like a support type of guy or girl, 35, great support on this thing, October, November. That's your line in the sand. If it goes below 35, you absolutely need to get out. You take a shot here, you're risking $2.50, but 35 would be my line in the sand.
All right, folks, we're going to jump over to our Stock Trader Network room at stocktradernetwork.com. We're going to get you ready for the open. We'll take a look at some of Dennis's overnight trades. I don't think he did a ton last night. We'll take a look at imbalances. We'll get you set up for the market today. Thanks for joining us here on Pre-Market Prep, folks. We'll be back at the same time, same channel tomorrow. Good luck today, folks.